I'd be interested to hear your thoughts on sort of the dollar as well, because it does seem to be that all this money is just going to the dollar. It's becoming extremely strong, and it's really impacting other economies throughout the world.
This is another thing. Remember, a year ago, everybody was talking about the death of the dollar. Remember that? The dollar was going to tank. No, the dollar is stronger than it's ever been, and money is pouring into the dollar. Now, that's for a variety of reasons. One is this inflation expectation thing that I think most people have wrong. They think the Fed will keep interest rates higher for longer, and as a result of the expectation that inflation is going to pick up. And in that scenario, if interest rates are a little higher or strong in the United States relative to, let's say, the European Union, where the economies are all in the tank, and the expectation is that the ECB is going to lower rates, and if the lower rates exist on euro-denominated assets relative to the U.S., the money pours into the U.S. because of that interest rate differential. But there are also other things going on. The stock market in the United States, if you look at the world aggregate index of the stock market now, about 70% of that is accounted for by the U.S. market. So the other equity markets are just shrinking, and the U.S. is booming. Everybody wants to be in the U.S. market. Now, so we have the interest rate thing. We have a booming U.S. market. We have growth in the United States is much stronger than the European Union. If you start in 2008, the size of the EU, the 27 countries that make up the EU, and the U.S., it was about the same. And now the U.S. is 50% greater, the GDP, than the EU. So there's been a huge gap in the so-called American exceptionalism has come in like gangbusters. The U.S. has grown much more than Europe, for example. And we have, look at China. China's slowing down. Why is China slowing down? Because the growth rate in the money supply is way below Hanke's golden growth rate of about 11% in China, a rate consistent with hitting China's 3% inflation target. And the rate of growth in the money supply is just a little over 7% in China. So the rate of growth in the money supply is a lot lower than the rate consistent with hitting its inflation target at 3%. Its real growth has slowed down, and its inflation is almost non-existent. It's 0.2% in China. And why do you think the yuan is hitting lows? They're intervening. They've intervened big time this week in China to try to prop up the yuan, which is going down. Everybody wants to get out of the yuan because they anticipate, by the way, the new policy that was just announced is that the central bank in China will be focusing like the US and the UK and the EU on interest rates, which is a big mistake, by the way, and that they will lower interest rates in China to get things moving. So if they lower interest rates, they're already very low. If they lower them again, of course, everybody wants to get out of the yuan because the yield's a lot higher in the US dollar.